So the pandemic is here. It's hit us like a freight train, and it doesn't seem to be going away anytime soon. The markets seem to have completely crashed. This is one of the worst market conditions we've ever seen. But it's come back, right?
Goldman Sachs reporting results that blew past estimates today.
Strong numbers that we've tracked during the recovery. That is the jobs number today, confidence, retail sales, Q2 price action on stocks.
We should be good. The markets are almost completely back or way above where they were when they started in the year. So it's 2 thumbs up. We should be able to move on and feel really good, right? I don't know if we could move on that fast. This is Simply Financial, where you can stop worrying, start planning so you can live your life better. Actually, it seems more now than ever. We're not sure who we can trust, what information we can trust. It's a pretty scary time to be here, right where we are. So let's look at numbers. I think there are strengths in numbers. I think we can really feel good or bad about raw data, more now than ever. So let's look at the markets. Let's look at the S&P. It started about 3,000, dropped all the way down to 2,200 at the worst part of the market. Now it's all the way back up to where it started. You've got the Dow. Dow started at 27,000, dropped all the way down into the 18,000 mark. Now it's all the way back up, almost back up to 27,000, 26,000 range. Then you've got the NASDAQ. The NASDAQ started about 9,000, dropped way down into the 6,000s. Now it's back, not only back, it's above 10,000. All numbers look good, right? Nah, not so fast. This pandemic has been a whirlwind of good and bad. How could a pandemic be good? Well, tech has been awesome in this pandemic. We have all relied so much on tech and digital and virtual everything. There's certain areas of industry, certain industries that have done incredibly well. We're eating more now than ever. I think there's a reason why they're calling it the Covid-19, because we all gained 19 pounds. You know, we're eating, but the restaurant industry, part of the industry has been suffering because they can't open their doors. So what do? We started delivering the food to our homes. We started to go into a segmented part of the restaurant industry that has exploded, and yet certain restaurants are doing terrible. So there's segments of the market, energy, consumer, like shopping, retail, getting crushed. Commercial real estate's in for a potential change. There's a lot in our economy right now that's in flux. Why am I telling you all this? Doesn't seem too exciting, right? There's so much good that's happening right now. It's scary though. There's more anxiety right now than we've probably ever felt. In January, I'll be honest with you, I don't think I could have spelled the word anxiety because I didn't even know it existed. Here we are in the middle of the summer, 4 or 5 months in, I know exactly how to spell anxiety. I never realized I would deal with it so much, and so many of you are feeling the exact same way. So let's look at the numbers of our own portfolio, what we're managing for you, because there's strength in numbers, all right? So let's look at the total portfolio. Now, some of the numbers that I'm gonna give you here have everything to do with all holdings in any portfolio that we have. So I'm gonna group it all together so I don't have to confuse you at all. And these numbers are big. The gross revenue of all the stocks that we hold, now it's just one company, but all of them, it's about $950 billion of gross revenue. And these are pandemic adjusted numbers. That means now we've been able to lower our expectations of all these companies and what they're going to expect this year. 950 billion in revenue generated this year. Can I say it again? 950 billion pandemic adjusted numbers. That means they're expecting about 350 gross profit. 350 billion in gross profit with a B, billion, this year after all this craziness has happened. That is huge. Guess how much cash they have on hand? About $325 billion sitting in cash in the companies in your portfolio right now. If you're scared thinking, well, these companies may or may not be able to pay their dividend, $325 billion sitting in cash. Huge numbers, folks. gigantic numbers. The best thing I can actually tell you though, from January to now, in January, you had an expected dividend that you were going to receive in your portfolio. As of June, 6 months, I mean, we're 3 months, almost 4 months completely into this pandemic. If you looked at your statements, and this is what I did, I grabbed your statements to find this information. Depending on the portfolio that you own and whether or not you are reinvesting or getting your dividends paid out, your dividends have grown somewhere between 5 and 15%. Your income has grown even though the value has gone down. This market has been tough and it's pulled down almost every single portfolio that we have. And I will tell you that our performance has been negative since this pandemic started. But our dividend, our income, what you need to live, has gone up at the same time. 15%. I can't tell you how proud I am to tell you that you've gotten up to a 15% increase on income in the same market that has pulled your values down. And here's where we have to know what we can trust. The value of our portfolio is real and it has gone down, but that value is not paying your income. The dividend inside of your accounts is paying your income. And that has not only been successfully sustained, it has been consistent and it has gone up in the face of a crazy pandemic and market environment. And that is true. That is reality. That has happened. That is happening. And you can bank on the fact that your dividends have not only increased, but they've been hitting your bank account or buying you more shares in light of all this. Last thing I'm gonna leave you with. Even though the market has gone down, even though your portfolio has struggled, these are strong companies. I just shared the values, the numbers behind these companies. They are really stable and strong. There's strength in numbers, which I keep saying. The reality of what you've experienced is as these values have gone down, you've been buying them at a low point and continue because the value of our portfolio has not come back. That is not a bad thing. That is a good thing. Tech in certain sectors have pushed the market up, which means they're at inflated levels because when we all go back to whatever our new normal is, these numbers will get adjusted. And the industries that have soared will pull back. Those are just paper gains at this point. And the companies that we're holding that are strong financially, really good companies, they will recover. And we've been able to compound. You have up to 15% more shares now than you did in January. And when those prices come back up, you have a 15% head start already on the recoil of rebound that will take place in your portfolio. So even though we are experiencing more anxiety than we ever have in our life, at least me personally, there is so much to be excited about, even though it's an election year. Even though we have no idea what's going to happen in the fall, it's okay. We are Americans. We live in a great country. Great things are ahead. No matter what happens, we will move on. We will figure out the new normal. We will survive, and America will always be a good place to be. Well, I hope. All right. So God bless. Hope you enjoyed this. Subscribe to our channel today and you too can be legend, wait for it, dairy.